Buying a restaurant with unsecured lending. What lenders really look for, buying a restaurant is an exciting step toward business ownership. But one of the first questions every buyer asks is, how will I pay for it? Many are surprised to discover that unsecured lending, loans that don't require collateral, can be a fast and flexible way to fund a purchase. At We Sell Restaurants, we work with buyers every day who use unsecured lending to purchase franchise resales, coffee shops, sandwich shops, and other opportunities. We also see a common mistake. Buyers underestimate what lenders look at when approving these loans. Just because the loan is unsecured doesn't mean it's no questions asked. Lenders still review credit history, income, and your overall ability to repay. If you aren't prepared, you risk unnecessary credit inquiries that can make future approvals harder. This article explains what unsecured lending really means, what lenders review, and how to set yourself up for success, even if your credit isn't perfect today. What is unsecured lending? Unsecured lending simply means you don't have to pledge collateral like real estate, equipment, or personal property to get approved. Instead, lenders base their decision on your creditworthiness and cash flow. Why buyers like it? Fast approvals, sometimes within 48-72 hours, no collateral risk. Your home or car isn't tied to the loan. Flexible use of funds. Cover purchase price, working capital, or marketing costs. Unsecured loans typically have slightly higher interest rates and shorter repayment terms than SBA loans, which is why lenders take a very close look at the borrower. Credit requirements still matter. Lenders generally look for credit scores, 680 or higher across all three bureaus, Experian, Equifax, TransUnion, clean history, no recent bankruptcies, foreclosures, or major delinquencies, ability to repay. Income and projected restaurant cash flow must comfortably cover payments. If you don't meet these benchmarks, your application may be declined. Too many inquiries can also hurt your credit, so check your eligibility before applying. Real lender feedback. Why buyers get declined. Here's an actual set of lender feedback for a client we worked with. Revolving utilization, 58%. Needs to be below 30%. Credit scores, 678, 702, 676. Must be 680 plus across all three bureaus. Reported income, $29,800. Lenders need proof of repayment ability. Delinquencies, 7 accounts with serious delinquency reported multiple times. Here's what lenders see. High utilization, using more than half your credit signals risk. Mixed scores, 1 bureau under 680 can cause automatic rejection. Negative income, shows you can't service new debt today. Delinquency history, raises red flags about repayment behavior. The lender's response was clear. The last thing we want to do is move a client forward and get them declined with unnecessary additional inquiries. If you have a credit partner, spouse, business partner, family member, or friend, we can review their credit. If they have scores in the 700s, we can offer 0% business cards that report only to the business side. If they are above 680 and earn at least $50,000 annually, we can do a term loan. This highlights that lenders want to help you succeed, but won't risk an approval if you aren't ready. Val's story. Character counts. Take Val, a first-time buyer. She wants to buy a quick-service restaurant, but reviews her credit first. Val's situation. Revolving utilization, 58%. She pays balances down under 30%. Credit scores, 676, 702. Works with a credit coach to raise all scores above 680. Reported income, negative. Documents new employment and projects positive cash flow. Delinquencies. 2 accounts, resolves them, and shows 12 months of on-time payments. By taking these steps, Val improves her financial profile and gives lenders confidence to approve her unsecured loan. Options if you aren't ready. If your credit isn't there yet, don't give up. You can work on credit repair, pay down balances, dispute errors, and make consistent payments. Delay your purchase. Waiting. 6 to 12 months while improving credit can raise approval odds. Use a credit partner. A spouse or partner with stronger credit can co-sign or be the primary borrower. Explore business credit options. If a partner has 700 plus scores, consider 0% business credit cards that report only to the business. Benefits and risks of unsecured lending. Benefits: fast approvals help you beat other buyers to the closing table. No collateral required. Your home or car isn't at risk. Flexible funding for purchase price and working capital. Risks: higher interest rates, 1 to 3 points above SBA rates. Shorter repayment terms mean larger monthly payments. Missed payments can hurt personal credit. Expert tips for success. Check credit early. Know where you stand before shopping for a restaurant. Keep utilization low. Under 30% is ideal. Under 10% is even better. Document income. Show at least $50,000 in verifiable income if seeking a term loan. Avoid new inquiries. Don't apply for multiple loans or cards before purchasing work with experts. Certified restaurant brokers can connect you with lenders who specialize in restaurant transactions. Conclusion: get ready before you apply. Unsecured lending can be a powerful tool for buying a restaurant, if you're financially ready. Your credit score, payment history, and income all matter. As the lender in our example said, the last thing you want is a decline that adds unnecessary inquiries. Take time to prepare, just like Val did, so you can act quickly when the right restaurant appears. At We Sell Restaurants, we connect buyers with trusted financing partners and help evaluate whether they're credit ready. Combine strong preparation with the right restaurant listing, and you'll be well on your way to successful ownership.